Welcome to the Commercial Real Estate Podcast with your host, the Mindful Investor.
Welcome, everybody, to a new episode of the Commercial Real Estate Podcast with your host, the Mindful Investor. Today, we have the pleasure to receive Shane Melanson. Shane is based in Calgary, I believe, and he has a podcast. He does coaching, and he does commercial real estate development and commercial real estate. So today we're going to dive into his, he's going to tell us about his life and his investment career. And first off, to talk about commercial real estate, Shane, could you give us in a nutshell your career so far? What are the big steps?
Sure. So, I got into investing in real estate back in 2003. I worked at the city of Calgary in the assessment department. And one of the first jobs that they get you to do is essentially analyze properties that have sold twice in the same year. And what I started to notice was these were essentially flippers, right? There were people that were buying one property, fixing it up, and then making whatever $100,000-$200,000 in a year. And that was kind of interesting to me. And so I started to talk to some of the assessors that seemed to be a little more entrepreneurial in that division, and eventually got my real estate license, got my mortgage license, started to invest and do my own deals. Eventually moved to Sun Life, and that's where I was doing commercial lending. And that was kind of the exposure to bigger deals, right? A lot of our clients were pension funds, REITs, publicly traded companies, and they were doing 8, 9, and I never did $1 billion deal, but we did, big commercial property financing for these individuals. And then every once in a while, we would get an individual or a couple of individuals that would come in looking for capital. And it was very different than the institutional money, because when you're dealing with, and these individuals were worth, a reasonable amount of money, but not billions, right? They might have a $5 million net worth or $3 million net worth. And what I learned was they were raising capital from a group of people that were kind of close to them. And they were doing retail, multifamily, industrial, back then even office. And that was kind of my first exposure to what is syndications, right? This is back in 2006, 2007. And it was not nearly as prevalent as it is today, especially if you're in the US. I mean, it's on every podcast. It seems like, to go out and raise capital and do these types of deals. But back then there were, what I considered to be club syndications, kind of the book I wrote, which is, going out to a small group of high net worth individuals, generally business owners or medical professionals or people that had done well. And you've got one or two people that have the expertise on how to invest in real estate. And, I still didn't know how to do those deals. I was on the debt side and I was doing single family fix and flip rentals. I was building homes, and I met my wife and her family. They've got, a development company that's been around for, I think, 97 or 98 years now, publicly traded. And Andy, my father-in-law, he brought me in over time and showed me what I call the game of commercial real estate. How do you find these deals? How do you raise capital? How do you protect against the downside and risk? And so that was really how I, progressed. And this is over, obviously, probably from 2003. And then I got into commercial real estate in probably 07, 08.
Fantastic. So, can you tell us about the reasons that led you to commercial real estate? Why commercial real estate?
I mean, when I was 24, 25, I guess, when I was starting in residential, it was fine to be working 2 jobs, 3 jobs and hustling and making, okay money, buying and selling residential properties. But you quickly realize that if the goal is to replace your income, right, whether that's 10,000 a month, 20,000 a month, and you're generating 200, 300, $500 a month in a single family, and you're doing all the craziness of suiting basements and separating and, utilities and whatnot. I just thought that this is a long, slow path. And frankly, I didn't really see anybody. I mean, I would go to the rain events. I talked to the people that own 40 homes, and they were hustling harder than I was. And I'm thinking to myself, that's not where I want to be. Right. And then you'd meet people that owned apartment buildings or industrial complexes or a retail strip center. And one or two properties was enough to replace the income that they had. And then you have a multiplier effect when you actually add value. So, for example, let's say you buy an apartment building or a retail property or an industrial, it's valued on a cap rate basis. So I don't have to go in and fix a kitchen, for example, or do a bunch of value add and hope that the next buyer is going to see the value that I've created, right? Similar like that. That's the sales approach that happens in residential. When you're buying based on income, like it's very cut and dry. If I can increase the NOI or the net operating income, I'm able to increase the value of that property. If I get better quality tenants in there, then that's going to lower the risk and therefore lower the cap rate, therefore increase the value of the property. So it was a more sophisticated way. I could do one or two deals a year. I didn't need to do 10. And those were some of the reasons. And the people that really had the lifestyle or the assets that I wanted were in commercial real estate. And when I say commercial, I'm talking about apartments or the traditional retail industrial. I'm not an office fan, but that would be considered industrial or commercial as well.
Thank you. So yeah, there is more agency in commercial compared to residential. And out of all those asset classes you've mentioned in commercial, which one is your favorite and why?
I've got two that I like. And I mean, the easiest that most people understand is multifamily, right? Because it's not that dissimilar to residential. People need a place to live, and you can kind of quickly figure out where people want to, where they want to live, right? Close to amenities, close to transportation, hospitals, etc. The other one is industrial. And I used to like retail. Obviously, with COVID these days, that has become more challenging. But I still have a retail development where we're doing leasing, and it's performing. But there's just less clarity that I have in terms of what the future of retail is going to look like 10, 15, 20 years out. With respect to industrial, to me, it's a lot more. I have a lot more clarity and certainty because people are still going to be buying goods. They still need to be shipped and stored in certain places, and you can see with the e-commerce and online sales, that's not going any, in my opinion, anyways, right? Like, I think a person listening to this, you don't have to agree with what I'm saying because these are just my perspectives based on what I've learned from 15 plus years in the business. I mean, I was just on a trip with a bunch of guys, like major developers across Western Canada. And I'm listening to all of their beliefs and perspectives. And some guys are still very bullish on retail. Some guys are very bullish on industrial or multi. And so you just get to listen to what everyone's saying, and then you make your own decision. And so for me, that's just just kind of a caveat that none of what I'm saying happens to be fact. It's just opinion. But my opinion is based on just not reading a book. This is doing it for quite a while.
From experience, yeah. And so do you have a particular strategy when it comes to commercial real estate investing? You've mentioned value add. Can you expand a little bit on that?
Yeah. So the reason I like value add, there's a couple of reasons. And I think one of the big reasons is it justifies my existence to be in a deal, right? I mean, I just had a conversation with a gentleman who's a venture capitalist and looking to place, a significant amount of money. And one of the big things that I do is raise capital to be able to do the deals that I do, right? I mean, that's why I'm able to get into 7 and 8 figure commercial properties, is because I have other investors. And I mean, these people that have done very well are not looking to get a 6% return, right? They want 10, 12, 15, 20% returns. And that's why I've, as my skill set has improved and the team that is around me is improved, I'm able to do developments. I'm able to do, significant value add properties. And so I usually strive to be able to get the equity that someone puts into a deal out in a defined timeline. It could be 2 years, it could be 5 years. And it's very difficult to do that if you're just buying what some people would call coupon clippers, right? I mean, now if you're a physician, if you're a business owner and you're just looking to preserve wealth, then you don't need to take on the amount of risk and the amount of energy and effort that goes into doing a value add deal. But if you're going out and raising capital from people, in most cases, unless you're, a hedge fund or a pension fund or like these, these big groups that have to place billions of dollars, generally speaking, if you're trying to raise a million, 2 million, $10 million, most investors, not all, but they want to see like, what are you doing differently? Because otherwise I'm in an illiquid deal, right? You're one apartment building or one industrial development. Like there's very little liquidity. I can't get out of that deal once my money goes in. And so in order to put my money into that illiquid deal, there better be a good reason. And you better demonstrate to me that you're going to, you know, protect against the downside and give me some great upside. And so that's, a long-winded answer in terms of why I look at value add.
No, it makes sense. And so you mentioned syndications, and so why syndication and how? So you mentioned also your skill sets that you bring value when you syndicate. Can you expand a little bit on your strategies to raise capital?
So, I mean, there's a couple of questions in there, I guess. Like the way that I raise capital, there's a couple of different ways, right? So the way that I initially started raising money is different than maybe the way that I'm raising it today, right? The way that I raised capital initially, this is back before people were advertising or promoting themselves online. It was very much a tight knit group. You raise money, you do well by those people, and then you grow it, right? And so I think a lot of investors that are looking to raise capital for the first time think that there's like a secret hack or tip or one way to go out and get seven figures or $3 million in 30 days. And that will obviously sell a lot of programs and courses and whatnot. But the reality is, if you don't have a track record or you don't have a team, you're probably going to start smaller on that first deal, right? Because trust is really what it is why people will give you money. And if you don't have a track record, you could be the greatest person in the world, but it's going to be difficult to really have that level of trust, right? They might know and like you, but the trust comes from other, avenues, if you will. So I started off small, and I think my first deal was $2 million we raised, and then it went to a little bit more than that and more, and then I've raised as much as $8.5 million on a deal. Um, but there's a lot more work that goes into that too. And what I can tell you is, as your track record grows and people see you work through deals, and so I don't shy away from deals that have not gone as planned, but I've always stuck with them. I think you and I have even I don't remember because I've kind of talked about these stories so much, but I mean, there's times when deals have taken way longer. I've actually had to cash call investors. Now, I'm not going to get into the specifics, but it was contemplated that we may not get the financing we needed. And so it was written into our agreement that we could go back to the investors for more money. So it's not like it was a surprise, but I can tell you it's still never comfortable, right?
Mm.
And so when you've gone through some of these kind of difficult experiences, it makes you far less optimistic and a lot more realistic, and maybe even a little bit more um, you're looking at the downside a lot, right? And that's why I will probably only do a couple deals a year, is because I'm just so concerned about making sure that I'm only doing investing in places that I see a lot more upside, and my downside is always covered and protected.
Okay.
Because you're always that if you're raising capital, I say you're like one bad deal away from not for being out of the business, right? You lose people's money and it's going to be very difficult to come back. People do, but I'm just saying, like, protect your reputation, build that trust, be more conservative than you think you need to. And secondly, like, I'm not a lawyer, I'm not an accountant, I'm not telling people how to go out and raise capital. I'm just saying how I've done it. And I think just to kind of springboard into what I'm doing today and what others are doing, you can share your experiences. You're not promoting a deal online. I never do that. but you can talk about your principles, your values, who you are as a person. And that is going to make you an attractive person that people will listen to and pay attention to. And so I think that there's better ways, if you will, today to bring people into your world, but it is getting noisier out there. And so you really want to make sure that you're able to kind of separate yourself. I mean, coming on your podcast, right? I'm going to be exposed to people that have never heard of me before, right? And because I've been doing this now for 2 years, and I've done a lot of different things. I mean, my podcast is over 100 episodes. I've probably got 100 and some videos on YouTube, tons of like community service, just giving. And every once in a while, someone will come into your world, like the venture capitalist I talked to last week, or a lawyer I talked to a month ago. And they come in and they say, I've got a couple $1 million. I'm looking to place it. It's not going to happen today. And that wasn't the point, right? I don't need his money today. And that's the other thing is I'm never needy,
Mm,
because when you have more demand for your services, then you're in a very good place. I'm not arrogant about it, but you can be confident.
thank you. Um, could we dive into a deal that you really enjoyed doing, like it was a real success story in terms of raising money, and then more importantly in terms of adding value?
Yeah, I mean, there's a couple that I can think of, but one that was more recent, and that I can talk about that, was an industrial condo development that I did here in Calgary. We went out, was an off market acquisition of about 3 acres of land. And because we have, my partner and I have a good reputation here in Calgary, it was brought to us. And when I say off market, it was more of like a pocket listing. So, pocket listings in commercial real estate is the broker was aware that this land was available. It was not being broadly marketed for sale. It was a phone call, and I don't recall if it was myself or my business partner. I believe it was my business partner because he has more connections in that neck of the woods. And we went out, like, so this is kind of how quickly it happens. We get the phone call. Within 2 hours, we're driving, we look at it, we like it, but we have a lot of questions. And so we say, look, we're prepared to make an offer, but we need the time to test the market. So we got 4 months due diligence. We probably spent, I don't know, $30 to $40,000, maybe a little bit more, in terms of architects and marketing and hiring the agents to go out there. And we said, as long as we hit, I don't know what our threshold was, it was between 65 and 70% pre-sales, we'll remove conditions. And so it was a calculated risk. It takes money, right? I mean, I think the people that kind of promote that you can get into deals with no money down, I don't see it in commercial real estate. You still need some skin in the game. And usually the deals with no money down are deals no one wants. And so I'm not interested in those type of opportunities. Once again, this is my belief. So you don't have to you don't have to, believe what it is that I'm saying. I'm sure there's someone out there that'll prove me wrong and they'll find a deal with no money down. But after 4 months, we had the pre-sales that we needed with deposits in a lawyer's trust account. And we went forward. It was not a straight line. We had probably 5 different site plans and different size of bays. And what we thought the market wanted was actually different than what they really were prepared to pay for. So one of the big things that I'm always focused on is verified demand, right? Just because someone says that it's there doesn't necessarily mean that it's actual. And so we got the pre-sales, and one of the things I'm hypersensitive about, because I learned it from Muskoka, the 1,150 acre development we did in Ontario, was that just because someone says they're going to buy doesn't mean they're going to close. Okay, I mean, there's, especially in commercial real estate, whether you get retraded, drop closed, I mean, it happens. And when you understand the game, then you know what to prepare for. And so I told our brokers, sell this project to 125%. I want backup offers. And the reason I want backup offers is when it comes time to closing and someone comes back and tries to retrade me or grind me, then I'm going to say, that's fine. I'll keep your deposit and I got someone else in the wings, because it's just the game that gets played. And some people might think that sounds kind of like an asshole thing to do. It has everything to do with protecting my investors, right? And the reality is just like, it is a game. And so people will test you. And no one walked away because they all wanted to close, but they all want a good deal. And the best way to make it feel like there's a good deal is that there's someone else that wants to buy it, right? People want what they can't have. And so if you're able to set those situations up and you're smart and proactive about it, on that deal we did, probably close, well, it was over 30% return to our investors. It was about a 16-month turnaround. My partner and I did very well. Our investors did very well. And we springboarded that into the next development. And so that's kind of what happens. You find these properties, projects, um, and work it. I mean, that was not, my investors were passive, right? They had the money, they put it into the deal, they sat back and did very well. My partner and I were very proactive. Like, we were active, we were in the deal, we were sitting down, negotiating at site meetings every week. And so, but that was okay with me, right? I'm in the business of doing commercial investments. So there's going to be people that are active and there's going to be people over here that are passive. And it just depends on what side of the fence you want to be on. But regardless, you want to be educated, because you want to be able to look and say, what are the risks in this deal? And am I okay with it?
And so you talk about your active role in this development. Can you expand on how you reward yourself? So how does that work?
I mean, like, every deal is going to be different. Okay. So I will get a fee to put the deal together. Some people call that an acquisition fee, a syndication fee. I'll get a project management fee for working the project, right? And then there'll be a percentage of the upside if it performs, right? So there's usually some sort of a preferred return. I'm seeing some investors that don't offer preferred returns. And, everyone has their own way of doing deals. My preference is that a preferred return, just in case someone's listening, is essentially like if I borrow $1 million, we'll just keep it simple, and I offer an 8% preferred return. So every year, that $1 million costs me $80,000. If I'm not offering a pref or a preferred return, what that means is time is really irrelevant, right? Because if the deal takes 3 years or 5 years, it doesn't hurt me. But when you have a pref, then it keeps the developer or the general partner a little more honest. At least that's my perspective, right? And this is why, in my mind, it's so important to be educated, and so you understand what it is that you're investing in. Now, if you don't offer a pref, then there should be a reason why, and you should be able to articulate that to your investors. And like I said, there's so many different ways that you can structure deals. There's so many different ways you can earn fees. But at the end of the day, you got to be able to look an investor in the eye and say, this is what I'm doing. This is how I'm getting compensated. And if that makes sense, then let's go forward. And if it doesn't, because not every investor is going to have the same perspective, that's okay, right? I'm not here to try to convert someone that isn't interested or needs to be sold. Usually on my deals, I'm able to raise the money in a pretty short amount of time, 5 to 7 days from the time that I kind of make that initial contact to the time that I get those commitments back. But that's because I have a track record, right? And I know what to say, and there's that relationship and trust, or someone was introduced and there's that level of trust. If you don't have that, you're going to need more time to build that, right? And so there's a process, but I don't know if that answers your question or not.
Yeah, absolutely. And can we dive a little deeper into the product itself? So what is it you guys developed and what is it you sold?
Sure. So it was 24 industrial condos. So think of it like an apartment building, except the difference is, someone's not living there. They're going to put their business there. And so they were smaller, 1,500 square feet, 24-foot clear, overhead doors, drive in. And we sold them off individually to business owners that wanted to own versus rent. And so you needed to have a compelling reason as to why someone should buy versus rent. And that means you got to understand debt. You have to understand how much of a deposit they're going to have, what the rents are. And so you do, a market study, and you really understand what the landscape is. And some people thought we were crazy, frankly. And I thought, the price that we're selling these at is a big number. And I couldn't find a lot of comps or comparables. And so what I had to do was vet the market. And so we were able to do that. And then, 5 other developers followed us in, and unfortunately the market isn't deep enough to have that much demand. And so my understanding is some of those people are struggling. That's why, people, one of the things I took away from this ski trip that I was on, so I don't know if I mentioned it or not, but it'll come out of my email this week, was I was actually pretty lucky to get invited on this because I'm not like a big wig like some of these guys are, but I think people like hanging out with me, and I'm an okay snowboarder, so I got the invite. And anyways, the thing that I noticed on the trip, and there's actually a book on this now too, and I think by Dan Sullivan, it's called Who Not How. And the concept behind it is a lot of people that, especially that come out of the residential world going into the commercial, they're trying to figure out everything on their own, right? They're trying to figure out how to do it, watching videos, listen to podcasts. There's nothing wrong with that. But if you're going to invest $1 million, $2 million, $5 million, learning lessons the hard way, like, can put you out of business. And so one of the things that I took away from this weekend, or not even weekend, I guess it was Wednesday through Friday, was how everybody there was open to collaboration, to bringing in experts. They gave up a lot, right? These are people that are doing like multi-billion dollar portfolios, and they could easily hire people, but they would rather partner or joint venture or do something with someone that had expertise. And I never realized it until I started to kind of reflect on how I do my own deals, right? Like, I know what I'm really good at, but I'm also pretty good. I mean, everyone has blind spots, but I'm pretty good at figuring out where I'm not very good at. And so I'll bring people into my deals to help me with that. And in the world of commercial real estate, trying to piecemeal a deal by watching YouTube or listening to a bunch of podcasts, there's just too many nuances. And so get the foundation, but then really try to align yourself with people that understand um, the business. I don't know if I can't even remember the initial question you asked me, but I kind of went off on
Yeah,
a
but what you
tangent.
say makes a lot of sense. Absolutely. Yeah, finding the right partners to come up with the expertise that you lack, and not trying to do it all yourself. Yeah,
Yeah.
absolutely. And also, it goes along the idea that you can start by initially investing passively to learn the ropes and see how it's done, and then you can do it on your own.
Totally. I mean, I've got a client, Tim. That's how he first came to me, and he didn't invest in my deals, but he would show me other people's deals. And I'd say, well, and he was really smart about it, because when he invested, he was upfront. He said, look, I want to learn this business because eventually I want to be able to participate. Right. So he didn't hide his cards and try to like extract information and whatnot. And I told him, I said, look, like, I have no problem with people coming into my deals that want to learn it, but just understand that, you got to respect their time too, because a developer is not going to spend weeks educating you on
Mm.
everything that goes on. But if you're proactive and you're respectful of their time, you'll pick up a lot just from, what does the pitch deck say? What's the limited partnership agreement look like? How do they communicate? Right? You can learn way more just from being in a deal than from trying to kind of observe from the outside. And sure, obviously it's going to take some money to put into a deal, but you're absolutely right. I think that is um, that's a great way. And you may realize, what, the amount of work that this individual is doing, it's worth me to just keep putting money in with them, because my time and my value is better spent over here making money in my business or in my profession. And I'm just going to find the right people to partner with. I mean, a lot of the physicians that invest in my deals, they do that because they just say, Shane, I'm not going to, you know, spend the next 6 months trying to find a deal and do the due diligence and spend the money to figure out whether or not this thing works. Like, you've been at it for 15 years. I'm just going to trust you. You've made me money and I'm going to stick to this, right? I'm really good over here. That's one philosophy, right? And who knows, maybe when they're 60 and they decide to retire, they may decide to do something different, but at least for right now, they've got that as their plan. So.
Yeah, that makes a lot of sense. And so we've gone into a deal where it was a development deal. Could you take us through another deal, this time a value add deal, again, non-residential commercial? Could you talk to us about a deal like that?
Yeah, I mean, I'll kind of talk a a little bit high level because it's a client, and I just have to be respectful of what, the specifics, if you will. But this would be a retail deal. It probably had 20% vacancy, and they went in, they bought it. They knew that the rents were under market, right? So let's just say the rents were $20 a foot, okay, and they knew the market was $25 a foot, and they also knew that they could lease up because they had a tenant that would take the other. Um, Whatever 2,000 square feet or whatever the square footage was of the building that was vacant. So what happens is, and this is what a lot of people don't realize and why commercial is different than multifamily, there's a concept called slippage. And so in Canada and most markets, they're triple net leases if you have a tenant. But if you don't have a tenant, then the landlord is responsible for the CAM, common area maintenance, taxes, et cetera. And so if you're paying $15 a foot in CAM and taxes and whatnot on 2,000 feet, that's a significant amount of money that's going out every single month, right? Or sorry, every year. In that case, it'd be $30,000 a year, right? $15 a foot times 2,000, that's 30,000. Then when they rented it, they also get $25 a square foot, right? So now they're getting whatever that is, call it $50,000 a year. So the swing is not a $50,000 increase, right? Or an $80,000 or $75,000 increase or whatever that number works out to. Now what you've got is you've got an extra, I think the math would be $80,000 of net operating income. Divide that by a 6 cap. Well, I can tell you what a 10 cap is just really quick. It's $800,000 of value, right? That you've created. But it's not a 10 cap, it's more like a 6. So it's probably I don't know, like $1.5 million of value created from one tenant. And there's some costs, right? You're going to have to pay a leasing broker. You're going to have to put some money in for tenant improvements or TIs. You have downtime. It's probably not going to lease up in 1 month. It's probably going to be 6 or 9 months. But these are the type of things that happen. And when you understand the market and you understand who the tenants are and who the players are, then this is possible. But just like that can happen to the upside, it can happen to the downside, right? You buy a property and a tenant leaves, you know, you're not just losing $50,000 of NOI. Now you're having to pay the CAM or the common area maintenance and the taxes, and you might be down, 50 plus the slippage. And so in Calgary right now, one of the biggest challenges is all these office buildings that are vacant or 25% vacant. Some of these landlords are underwater, meaning they don't have enough money to pay the mortgage. Now, if you're a multi-billion-dollar REIT or a pension fund, you've got hundreds of buildings, and so you can offset that. But if you're an individual and you've got one building and you're underwater, it can be a pretty scary time.
Do you see opportunity there, or how do you look at it?
Not me. I'm not an office guy. I never have been. Some people do, right? There's some people that are taking some big bets on it. But it really comes down to, do you understand who the tenants are? Who, like the demand? I always go back to this, right? And so I never did office leasing. So it's hard for me to look around and say, yeah, that is an opportunity, because I know who the tenants are that would come into that. Mm-hmm. On the industrial side, I've done industrial leasing. I've done retail leasing. I've done multifamily leasing. So I understand the tenants and what they want, right? And so that's where, the competitive advantage comes in, is just understanding what people want and figuring out, is there a gap in the marketplace? More demand than supply.
Okay. Thank you. So I think there is a lot of value here for the listeners, because you really walk the walk, and you talk about deals with you have the right approach, you're with value add. And would you have any tips for developer wannabe? I guess your answer is going to have to do with demand, sizing, and due diligence.
Well, so if you are doing a development, like on the scale of 0 being no risk and 10 being the most risk, like unzoned or rezoning land is like a 10. Like that's the most risky, right? And that is a true developer. I've done rezoning, but most of the time I'm doing a development, it's based on zoned land. And that's probably a 7 or 8 on the difficulty scale or spectrum. And so I think what you really need to do is you've got to find a development partner. Like if you've never done developments before, I would never go into it thinking that you can, hire a bunch of consultants and that you'll be okay. I've been at this now for, I guess, 4 or 5 years of doing developments, and my, you know, wife's family, they've been developers for 90 plus years. So I've got a great um, network that I can tap into and ask questions, right? Like every Sunday, we talk for probably 2 hours on what's going on and just learning it. So you multiply that over 12 years, you get a lot of insights. But that being said, I would never go into a deal without having someone that's got probably 20 years experience. So my, business partner on the developments that I've done to date, on the residential side, I've got enough experience now that and team that I can do those without, certain partners. But doing a retail or industrial development, like my business partner Jason on that is just so invaluable. I can't say enough. And we are joking around yesterday when we were going through um, the tender and when we got bids back and quotes from our general contractor. And I said, like, I'm probably a little more self-deprecating than I need to be. But my partner Jason said, like, this as well as I do. I said, no, I don't, because there's still terms that he'll throw out in a meeting and I don't even know what the hell he's talking about. And so I'm thinking to myself, I don't know what that term means then. And I'll ask, obviously, but it just goes to show I still have ignorance when it comes to doing development, even after years of doing this. And I think that when you get around people that have been at this for a while, they are generally quite humble, because every deal is different, and you don't know everything. And so having someone in it is critical.
And from the deals you've seen, so how do people pick a GC, like a general contractor or a builder? How does that?
That's like a whole nother that'd be like a whole episode, honestly. The amount of information and lessons that are learned, like, are you doing a lump sum, are you doing cost plus, what GC, how do they tender it? Like there's no one way to do it. And should you do construction management? How do you find them? How do you incent the general contractor? Like, um, yeah, I would be doing you a disservice to give you kind of a 60-second answer, because and I'm not trying to be aloof. It just really does take a ton of time to go into it. And I'm not even the best person, right? Like when I'm doing this, we sit down. I know what it is that I look for and why I go with people that I do. But the first time that we picked a general contractor, we met with like 6 of them. And I got them to jump through a bunch of hoops to figure out who was going to be there. Because what I want is reliability and trustworthiness. So if you can't show up for a friggin' meeting on time, I'm probably not going to hire you. But you can show up for the first meeting on time, or you can show up for the 6th meeting on time. So that is probably one way that I would test people.
Okay, well, there is much value there. So you started a podcast 2 years ago, you said. What made you decide to do that?
Um, one of my coaches suggested that he said, Shane, you have a lot of thoughts and ideas, and you got to get them out of your head, right? And you have to share them, because that will help you to clarify for yourself what it is that you want to do, what you believe, your principles. And a side benefit of that, obviously, is that it could potentially bring in more deals, and it may even help you raise capital and all the rest of it. Um, those were not really discussed when I talked about it with my coach, but he kind of suggested that that would be a good first start for me. I'd taken Toastmasters and I'd done, a little bit of public speaking, but I really did want to figure out how to help other people, number one, and to grow my business. And so I use the podcast as a way to kind of just get some ideas out of my head, right? I do some interviews because it allows me to tap in and network with people that I wouldn't normally talk to. Um, but secondly, it allows me to share what it is that I believe. And I think that's probably one of the things that not many people are going to talk about. And that is getting really clear on what it is that you value and who it is that you want to bring into your deals, right? People that have a get rich quick mindset, or blaming, or no responsibility. Like for me, I don't want those people to invest in my deals, because I just know how difficult it is. And there's always going to be challenges along the way. And so I'm just hypersensitive about attracting the right people into my world or my life. And it's a great way to do that in a leveraged fashion, right? Someone comes in, maybe listening to this podcast, they don't know anything about Shane. They can Google me, they can go listen to one of 100 podcasts, they can read my book, they can go to my website, and they can determine for themselves, is this someone I want to listen to or not, right? No different than why you're doing these podcasts, right? It gives you an opportunity to share a message with people, and they're going to follow your journey. And I think that that's probably one of the reasons for having a podcast, why I started it. But it takes a lot of dedication. I don't know how many podcasts have like 20 episodes out there. And when I first started, I'm thinking, this is a lot of work, right? 8 hours to prepare for a single podcast, because I would do solo episodes. I would share as much information as I could. Now I can do it and, knock it out in a lot quicker, but I still takes some time to prepare.
Yeah, and I've noticed with your podcast there is a lot of on those episodes where you're on your own. There is a lot of content you share with
Yeah.
your audience.
Thank
It's
you.
fantastic podcast. So I know you have a mentorship program, and you've mentioned that you had a mentor yourself. You have coaches. So I also believe in mentorship and coaches. So why did you start this program, and what do you offer to your students?
The reason I kind of started it was when I was in brokerage. So brokerage being, selling commercial properties. Most of our clients were institutional REITs. They were sophisticated, right? And a commercial broker has a very difficult job. I don't think people realize it. If they come from the residential world where there's 6,000 realtors in Calgary, right? You call up any residential realtor, he's going to show you a property. You call up a commercial broker that is good, he's one of 5 in the city, and you're probably not even getting through to him. And even when you do get through, if you have no track record, he's probably not going to take very much time, right? And it's not because he's being a prick about it. It's because they just know how difficult and how long of a road it is to go from no commercial property to their first. And so what I found is when I would work with an engineer or a physician or a business owner or someone that's never bought one before, there was like a ton of coaching that went in, right? It was like you're part psychologist because it's like, this is going to be a bumpy road and it's okay. Like this is what's going to happen. And then, you got to be the glue that keeps that deal together. And one of the things that I realized was that uh, 1 out of 5, 1 out of 8 people that start the process will actually see it through to the end. And so if you have no skin in the game as a buyer, then you can suck up a lot of time from a broker's perspective. And the reality is maybe the first deal isn't the right one to do anyways, but a broker is only paid when they close a deal. And so a lot of new investors will never get the time to work with a successful broker because those brokers see it as too much risk, right? If you put yourself in the shoes of a commercial broker, okay, I can sell this $10 million apartment or $5 million apartment to a guy that's bought 20 properties or a person that has 5 residential houses, right? I mean, it's a no-brainer. And they don't market it on MLS. They basically have a small list and they take it to them and they say, here's the deal. You're one of the first 3 that gets to see it. Let me know what you think. But there's still a demand and a need for the person that has those 5 residential houses to get into it. But the broker's not going to teach them. Their lawyer's not going to teach them. And so I looked at it and said, I think that there's a demand, and I tested it and I realized that there was people out there that had money that wanted to be able to invest. And so I take them through kind of a coaching program. It's group where you get to hear other people that are doing deals. You get to see their struggles and know that it's okay, that it's common, right? I think that's one of the biggest things is like, look, expect this, right? This is not uncommon. There's going to be challenges as you go through the deal, and to have someone that you can bounce ideas off of is helpful. And then the second group are people that are already investing in commercial real estate, but they've tapped out. Maybe they raised $500,000 or $1 million for one deal, but they're like, Shane, how do I raise $5 million? How do I raise $10 million? How do I get to that next level? And so those people, I have a program that I show them how to raise capital using some of the more advanced strategies of an online digital platform, and we don't have to get into the specifics of it, but those are the kind of 2 groups of people that I try to help. And frankly, there's many reasons for that, right? I've had partners. Like the deal I'm doing right now was a coaching client that I helped. Just so happens that we got along quite well. He said, Shane, I can put in a certain amount of money, but I still need some. I'm not advertising this and I don't broadcast this when people come in, but it just so happened I liked the deal. It was close. There was expertise that I could bring to it. And I said, yeah, I'll raise some money for it and I'll come into the deal. And so we did. And it's gone very well, right? Um, Other times people will just send me deals. Other times people will say, you know what, I've got capital. So there's so many reasons to do this. I'm not going to, bore the audience with all the different side benefits of coaching, if you will. But I mean, it's how you and I got introduced, right? I mean, you were kind of interested in it. And so if you think about how relationships evolve, right? It doesn't happen from one phone call. It happens through, time with someone. And that time with someone doesn't have to be a phone call or a podcast like this. It could be listening to my podcast. It could be reading a book. It could be going on someone's website and eventually, finding the right person that's going to help you. And I can't stress that enough. I mean, not many people are going to have a father-in-law like I did to get them into the business. Okay. That's just the reality. And so what's the next best way? Well, the next best way is to go work for a commercial brokerage. Well, a doctor's not going to give up his, $400,000 a year job to go learn the business. But if you can tap into someone that's put together like a framework and a systematic way to go out and buy properties, is that worth an investment? I mean, if you're serious, I think it is. If it isn't, then obviously, you're not going to do it. So.
Fantastic. Well, Shane, so how can people get in touch with you? I think it's pretty easy.
Yeah, I mean, the best way is just to go to my website, shanemelanson.com. So MELANSON.com. That's the easiest way, I mean, from there you can kind of get some of the resources, my podcast and the book and all that kind of stuff. And yeah, I always encourage people to just test it out first, right? Because that's the best way to figure out whether or not what it is that I believe and what it is that I'm doing, if that resonates. It's not going to be for everybody, and that's okay.
And I think the benefits of this episode today, we get a good view of what it is you do and how you add value to deals. And I think we had I had a good time. Thank you, Thank you, Shane, for joining me.
You bet. I appreciate it.
This has been the Commercial Real Estate Podcast with your host, The Mindful Investor. Thank you for tuning in, and for more information, visit themindfulinvestor.net.